Hello everyone, today's video is all about the new rules coming in for the CIS regime that include VAT. So, CIS Construction Industry Scheme. For those who are in construction, it's a well-known tax operation, how tax works in that sector. It's been in the UK since the early 70s. Basically, it was brought in because the tax authorities thought that a lot of subcontractors weren't good at handling their own tax affairs, and so the contractors withheld tax on the payments to subcontractors, representing income tax, corporation tax, unless the subcontractors were of such a reasonable size and could show that they were large enough and had the know-how to handle their own tax affairs by being paid gross and then accounting for HMRC, the tax at the end of the year on their tax returns. So it's been going for nearly 50 years in the UK. What is changing is specifically on VAT. So the CIS was about what we call direct taxes, income tax, corporation tax. Now the change is on the VAT. So what has happened in recent years is a phenomenon called missing trader VAT fraud. So in a nutshell, this is where subcontractors provide a service to main contractors in the building world, and they charge VAT on their invoices. So they charge output VAT. The contractor pays the invoice, including the output VAT, to the subcontractor, and then the subcontractor disappears without handing the output VAT over to HMRC. This has become so rife in the construction industry, apparently, that HMRC have now changed the rules wholesale on how VAT operates within the construction industry sector. So, what is changing? What is changing is that to combat this so-called missing trader fraud, where the subcontractor goes AWOL before paying the VAT, is that now they don't charge VAT in the first place, so there's no VAT paid to them to do a runner with. What happens is that the contractor has to do what they call a count for a reverse charge supply. In other words, they charge themselves VAT that would have been charged from the subcontractor and claim it back on the same VAT return. So you may say, well, what's the point of that? The two just cancel each other out. If you charge yourself VAT and you claim it back, then it's a net nil effect. And yes, that it is, but what would happen in the past is that the output VAT should have been paid over to HMRC by the subcontractor, but it wasn't. And yet there was input VAT being claimed by the contractor, so there was a loss to the treasury. So now the subcontractors cannot abscond with the output VAT on their invoices because they don't charge output VAT to begin with. Essentially what will happen is they will send in an invoice to the contractor saying you must reverse charge this supply. So for example, let's say that the subcontractor put in an invoice to the contractor and it would have been normally £1,000 plus VAT, so that's £1,200. Going forward, it will just be £1,000. No VAT added. Contractor gets the invoice, £1,000. There's narrative on the invoice from the subcontractor which tells the contractor to reverse charge account for this. So on the contractor's VAT return, they will charge themselves the £200 that would have been charged by the subcontractor and also claim it back. So for the contractor, it's no different. However, for the subcontractor, they will be at a cash flow disadvantage because a lot of them use that output VAT for cash flow purposes before paying it to HMRC. Not everyone in the subcontractor sphere was up to no good for the reason that they brought in the scheme and the changes to the scheme in the first place. Those who genuinely played by the rules paid over their output VAT like they should do, which is most subcontractors, but they still had 3 months or 4 months or however many months grace period before having to submit their quarterly VAT return. And that was a invaluable source of financing and funds for a couple of months before they had to pay HMRC. So a lot of them did pay HMRC on time, but there was always a lag between when they received the VAT inclusive amount from the contractor and having to pay the VAT element over to HMRC. Now they're going to lose that extra cash flow advantage because they're not going to receive any VAT element. So subcontractors need to be mindful of this, and from a cash flow point of view, they will be disadvantaged, even though over time it's no worse or better off. But from a cash flow timing wise, there could be issues from when this new change to the scheme kicks in, and it kicks in on the 1st of March next year, 2021. So this is from invoices of supplies made within the CIS. So subcontractor makes CIS supplies. They're the ones that will reverse charge their supply to the contractor. If the contractor also then makes supplies that fall within the CIS rules, no changes to the definition of what supplies are in the CIS, that remains the same. The contractor on their invoices to their customers may have to do exactly the same if they are a subcontractor themselves to someone else. Depends on how many links there are in the chain. So each company needs to work out, are they making supplies themselves that fall under CIS, and so what should they be doing on their sales invoices, and what to look out for from their suppliers and how that's going to change. So a couple of things to think about. The fact that previously under CIS, goods weren't part of it, it was just services. However, with this new VAT change within CIS, goods, if they are connected with services, do fall under the reverse charge rule. So, for example, if you are a subcontractor and you are supplying wood for a staircase to a contractor, that on its own wouldn't fall under the rules, and you would just charge VAT at the normal rate. However, if you are charging wood in the context of also building and installing that staircase, and it's going to be on the same invoice to the contractor, then even the materials element, that will also fall under this reverse charge rule, where you don't charge VAT on the entire invoice. So you don't split out the invoice and say, actually, the bit relating to the materials, we're going to charge VAT as normal, and the rest of it will charge zero, and you have to account for the VAT, Mr. Contractor. It's all linked together and treated as a reverse charge supply. So this is a real game changer. It's reverse charge supply. People aren't used to this. It doesn't happen very often in the VAT world for UK traders. Yes, if you are importing from EU, you're a business, you might have dealt with reverse charge, but certainly the vast majority of people working in the construction industry will never have come across the reverse charge before. And it's a little bit counterintuitive at first, the fact that you have to charge yourself VAT and then reclaim it back, but it's just how the mechanism works, so that there's no cash flow, VAT cash flow, falling into the hands of the subcontractor, who, in HMRC's opinion, could then do a runner with the money. By the fact that the subcontractor will no longer charge VAT, there's no VAT money for them to do a runner with. So CIS and VAT, new rules come in 1st of March 2021. If you're in the construction industry, You need to think about this. Thankfully, there are some helpful guidance on HMRC's website, including some flow charts, which are pretty easy to use, where you just go through and it points you in the right direction as to ultimately whether or not you will still continue to charge VAT at the normal rate, or whether or not you have to reverse charge your supply and the contractor has to account for the VAT. Now, it works for all of the different VAT rates, because in the construction industry generally, it's not just 20%, it could be 0% or 5% as well. So it doesn't matter what normal rate would have applied. If you are caught by the new rules, the contractor themselves now must reverse charge that supply at whatever rate of VAT would have applied in that circumstance. So if you like this video, please do subscribe up here, and I will see you soon.